Let's start with a stock that plunged after the company pre-announced mixed fourth-quarter results, disappointing guidance. That's been the story for some companies this week. DuPont shares down 12% this week. Two firms downgraded their ratings to their hold equivalents. But, Gina, you are steering clear altogether. You call this a sell, right, DuPont?
Yeah, so, DuPont is suffering on two fronts. One is that they do have some cyclicality to a lot of the end users of their chemicals. Now, given the GDP numbers, that should be fine. But the other double whammy for DuPont is that China just is not taking up their destocking, and it's just hurting them, and they're not able to get over that. And I think that that's something that's probably going to continue.
All right, so that's a bail. All right, next up on our list of bails is a member of the so-called Magnificent Seven that Jim Cramer said should be removed from the group. Magnificent no more. Tesla missed on the top and bottom lines after the bell on Wednesday had its worst trading day in over a year. On Thursday, $80 billion in market value wiped out. That could pay for a couple of Twitters right there. Your take on Tesla, Gina?
Yeah, so Tesla's a tough one because they have such an advantage in terms of charging, the charging network that they built out. The car that they built is beautiful, but they have, Elon Musk has started to go off on these tangents. The Cybertruck is, in my opinion, ugly and, quite frankly, has actual safety issues that may prevent it from being sold in Europe. That's a problem. And you have Elon Musk himself sort of going on these tangential ideas that are taking away from his focus on Tesla. This is a problem. While I think they have the strongest charging network and they have the best car, their growth will naturally start to slow if they don't keep building on that. And there's a lot of reasons why, that the focus is just not there. Some
very tentative guidance out of Tesla earlier this week. Final bail is Humana, having its worst day in 2 years yesterday. Shares sliding more than 10%. Surprise fourth-quarter loss and weak full-year guidance as more Medicare patients opt for surgeries they put off during the pandemic. That raises Humana's costs. Gina, you're not buying the dip.
No, I'm not buying this one because Humana is blaming costs and the Medicare Advantage program on their miss. But if you look, for example, at United Healthcare, which is the largest issuer of Medicare Advantage programs, they're able to manage this better. So I think this is a problem within Humana, not a problem with the Medicare Advantage program.
And now we're going to get a buy, and that would be PayPal. Shares down fell yesterday following what the firm called an unforced communication error, when new CEO Alex Chriss told CNBC his reveal would shock the world, but then just formally announced projects that had been teased last spring. Some shock. Now down 25% this year. Gina, you think this is an entry point on PayPal? That, I think, is our mystery chart, down 5% for the week so far.
It is, Tyler, and I feel like I'm going to go to my grave. On my gravestone, it's going to say, she said PayPal was cheap. But, what they were revealing were things that were already in the works. It actually cost a lot of money, and it was one of the reasons that they had problems really managing their margins and their earnings last year, or earlier this year, I should say. But those are really going to start to pay back. The features and the functionality that they're bringing out, in particular the fast lane, the ability to very quickly pay for things, that's important, and I think that will be beneficial.